And Oliver Sloup at Blue Line Futures and I were just discussing this just before we went on the air. And you made a great point, Oliver. Look at where we have come from just a week ago. It almost seems like that WASDE, that the March WASDE was kind of the big knockdown punch, and now we just can't get up from it.
Yeah, we haven't, and we've been mostly consolidating, but you hit the nail on the head when you said this is kind of a risk-off atmosphere, an environment that we're in, at least for today. I don't know if that's going to play out into the ahead of the weekend and tomorrow's session as well, but you look across the board, we've got grains under pressure, outside markets under pressure, and the energy sector just getting crushed. Crude oil's down about 8% in the last 8 days, and that certainly isn't helping corn at all. So you're seeing a little bit of risk off across the board. Corn also was up against technical resistance. 560 has been the top end of the range really since the start of the year. We wrote in our daily commentary that this was an inflection point. If we were able to get out above there, we could go retest the contract highs, but a failure at 560 spurs long liquidation from the funds and could take us back into the mid 530. So a little bit of a trading range, and I wouldn't be surprised to see that continue until we get to the end of the month where we get that real new news that the market's looking for to give us a new direction.
Okay, if we have a follow-through failure on a Friday, and I wasn't trying to be funny there, but if we do have follow-through and we close down here, and then we have another follow-through tomorrow where we close lower, doesn't that just switch this whole thing to more of a bear trade then?
It does a little bit, probably more so for soybeans. As I had mentioned, corn is a little bit more sideways in that front month May contract. The May soybeans, on the other hand, are at an inflection point, psychologically significant. $14 handle. You've got some trend line support here. If we are not able to defend that $14 handle, that could really spur and accelerate some of the selling pressure. There's really not a whole lot of technical support if we continue to get follow through selling, as you had mentioned, until we get down into the mid 1350 area. So the bulls really need to hang on to this $14 handle ahead of the weekend to kind of keep hopes alive that we could continue to grind higher into that end of the month report.
Well, you talked about that sell-off mentality. It also shows up in the livestock, and we'll get into that next. Stay with us. Don't go anywhere. We've got more coming up next.